Thanks for joining us at xm.com for this Forex Preview video. We'll be having a closer look at the Bank of England, which meets on Thursday at 11 o'clock GMT. I'm Cristina Marujos, and joining me today is Cristina Barcenido, investment analyst. Cristina, the Fed surprised markets last week when its dot plot showed an increased number of policymakers projecting a rate hike in 2022 and 2023. Since then, expectations have strengthened that the Bank of England could also signal higher interest rates in the coming years, perhaps earlier than the Fed in the second half of 2022. Therefore, could we see any hawkish turns from the Bank of England this week, similar to the Fed's?
Hi, Christina. Indeed, interest rate futures are now flashing a higher probability of around 70% for a rate hike at the end of 2022. And this is also evident by the flattening yield curve. Particularly, growing rate expectations tend to raise the yields for short-dated bonds that are sensitive to policy rate changes. And at the same time, pressure yields for long-dated bonds that are sensitive to inflation. And this seems to be the case now. Besides that, we saw inflation rising above the central bank's 2% target last week. Well, not significantly, but still this was a violation. And we also got an optimistic speech by the bank's senior economist who is leaving his position this month, admitting that the economy is close to pre-pandemic levels. Well, Mr. Haldane is a hawkish policymaker and was the only to vote for a bond reduction last month. So his comments were not a big surprise, but he wasn't the only to sound optimistic recently. There were some other hawkish comments from policymakers who previously were considered more dovish, saying that interest rates may need to rise in late 2022 if the economy grows as expected. So we overall see some increased diversity between policymakers, and perhaps that could be a warning signal that the bank is gradually shifting towards the tightening side. Nevertheless, I don't think that the bank will act as the Fed did last week. There will be no new economic projections or a press conference on Thursday, so probably the bank will remain patient until it gets more clues about whether the recovery in the economy is sustainable. Of course, the data continue to reflect an improving economy. The unemployment rate has further slowed down. Jobless claims have fallen for the third consecutive month, and the flash PMI figures are expected to remain well above the 50 threshold, which separates expansion from contraction this Wednesday. However, there's still some uncertainty about how the Indian variant will develop in the next few months. The recent increase is not very concerning yet, but it was enough to delay the reopening phase for 4 weeks. And besides that, the government's employment scheme, which has been subsidizing employment costs for businesses, is ending this September. So the bank will probably remain patient and see how conditions will move forward before removing any layer of stimulus. But I wouldn't be very surprised if the number of hawkish policymakers grows at this meeting, or the bank's communication style sounds more optimistic despite the delayed reopening plans. Perhaps the debate for a rate hike or a bond tapering could become more balanced at this policy meeting, although policymakers may reiterate that the rise in inflation is temporary, related to transitory factors. Now, whether the Bank of England could raise its interest rates faster than the Fed, well, I'm still cautious about that. The bank hasn't expressed any flexibility about inflation, which suggests that it may face stronger pressures to act. But on the other hand, the economy continues to face risks from Brexit and the pandemic, and also it has never moved earlier than the Fed has before. So I think that whether the bank will move faster or not than the Fed will be determined by the upcoming data.
And now turning to the pound, can the Bank of England recoup last week's losses, or is this the start of a downtrend for the currency?
Well, as we said before, we won't get any new economic projections or a press conference after the meeting. So the odds for a strong hawkish message is low, but still, if the policy statement signals a hawkish turn earlier than expected, then that could push the pound higher. From a technical perspective now, pound dollar has crossed below a long-term supportive trend line last week, and that decreases the case for additional downside corrections. But if someone looks closely at the chart, the price continues to trade above its previous low of 1.3068. So the uptrend hasn't been officially violated, and that keeps some optimism in place. What remains to be seen now is whether the price will drop below 1.3668 after the Bank of England's policy meeting, or bounce back above the broken ascending trend line currently around 1.41, eliminating the risk of a downtrending market.
Cristina, thank you for joining me today. Thank you for watching this Forex Preview on the Bank of England here at xm.com.